Welcome to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on the final day of May 31st, 2024, and joining me as always, the omniscient, Dr. Orphe, Divounguy, PhD, economist. Dr. O, we've been talking this week about what to expect with PCE, personal consumption expenditures, which is a pretty important piece of data. I mean, I know the Federal Reserve likes it, like fish, like water. PCE, just to kind of go through some of the high points, PCE index, and we're talking about April numbers. This is one of those data points that requires nearly a month of processing for it to be released. We're always getting data from the previous month near the end of the current month. PCE index rose 2.7% year over year in April. Core PCE, which I think is kind of, where the people at home feel PCE, this excludes food and energy prices, still rose 2.8%. That was above expectations. The broader PCE index increased 0.3% from March 2024.
So what you mean to say is it was in line with expectations, right? Well, it
was in line with your expectations. I know that you and I have been talking about this sort of, off and on over the last couple of weeks, but.
So yeah, now, headline PCE at 0.3%. Basically looks like it's stalled, right? Last month, it was also 0.3%. So by last month, I mean March. It was 0.3% increase in March, a 0.3% advance in April. On a year-over-year basis, 2.7%, in line with most economists surveyed ahead of the release. Core PCE actually eased from 0.3% in March to 0.2% in April. That's progress. And the Fed will be looking at that. The market definitely responded. When you look at consumer spending, personal consumption expenditures in real terms, real PCE what you learn is that real consumption actually fell in April by 0.1%. And so I think that was kind of the big surprise, right? The price index, not so much a surprise. Real consumption expenditures falling was a surprise. The markets responded with stocks rising, but also treasury yields falling on the news today. Great way to go into the weekend. It tells us the inflation picture. Inflation is likely to ease further going forward in the months ahead. It shows the consumers moderated its spending and consumption volume is falling. And that perhaps, you have a consumer that's ready to tap out. So again, I said good news, but it's good news. Good news is bad news. Bad news is good news. You have a consumer that's squeezed. You have credit card and auto loan delinquency rates rising. You have a slowing economy. Yesterday, we had GDP numbers revised for Q1. They came in lower than expected, lower than previously estimated. Again, the U.S. economy is cooling. It's cooling slower than we had anticipated, but it's cooling again. And that tells us that perhaps we might still get at least one rate cut before the end of the year.
So let's take it into real terms for real people. You're talking about the consumer being squeezed, credit card obligations being up. Where else is this manifesting itself in the real world?
Well, right now, you look at the PCE numbers today, you could see that consumer spending is easing. It's falling in real terms. Consumers are basically showing inflation fatigue, when you have higher prices for longer, when you have higher interest rates for longer, and the cost of servicing your debt is high, well, you have to slow down at some point. And I think that's what's happening. By the way, another headline I saw yesterday, just to confirm this, is the biggest U.S. retailers, Walmart, Target, are cutting prices. They're like actually slashing prices. Consumers are moving from name brands to store brands to store brands, and you're seeing retailers cutting prices. I mean, this is starting. It's just the beginning of, I shouldn't say the beginning. The economy was slowing down, but now, we had a strong first quarter, or at least a first quarter that seemed strong, but you're starting to see, cracks emerging in consumers' balance sheets. And that's ultimately going to be reflected in prices. Of course, that is if government spending doesn't tick up from here to keep inflation elevated.
This is purely anecdotal, but the last 2 times that I've gone shopping, as I was making my way, through the checkout register, the people in front of me were putting things back upon the totaling of their bill for groceries. And it's not to say that I've never seen that before. I mean, obviously I've seen that before. I lived through that personally as a kid. I mean, just trying to stay inside of a budget. But this seems to be, having a real world impact in people's lives. And so the cost consciousness, I think, of the consumer is maybe at a different level than I've seen in a very long time. I'd say maybe going back to, sort of the 2008 housing crash and maybe the 3 years that followed it, where things are they're starting to get really tight at home. Yeah,
I think things are tightening. Interesting recent article by the San Francisco Fed economist shows basically consumer savings, that extra stock of savings, excess savings basically depleted. The labor market's the only thing supporting the consumer at this point, right? So, real disposable income increasing 0.2% this month. Consumer spending increasing 0.2% this month. The consumer is just hanging on. And if you get a big crack in the labor market, you're likely going to see spending fall much further. So anyway, this is how this is playing out. Spending is still okay, but declining in real terms. The consumer is likely to slow further in the months ahead. And ultimately, that's what the Fed would like to see in order to bring inflation back down to its 2% target. But we're not that far off. We're at 2.7%. We're not that far off. It's coming.
Well, I appreciate your thoughts as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high-quality podcasts at americastalking.com.
Are you tired of news that puts politics over people? At the nonprofit Franklin News Foundation, we believe in putting people over politics by delivering nonpartisan news and audio content that serves you, the American taxpayer. With Franklin News Foundation, you can read fact-based, state-focused news for free at thecentersquare.com. You can listen to civil, balanced conversations between policy experts through our podcast network at americastalking.com. Or you can get in-depth news on K-12 education spending, curriculum, and school safety at chalkboardnews.com. It's all free through Franklin, where we put you, the American taxpayer, first in every story, episode, and conversation. And it's only possible through our supporters. Together, we can produce content that puts people over politics and brings Americans the news they deserve. Become a supporter today at franklinnews.org/donate. Once again, that's franklinnews.org/donate.